Home prices have come down in recent months as buyers get discouraged by high mortgage rates and rising costs. However, sellers are locked into sub or near 3% rates thanks to the buyer-friendly lending environments of 2020 and 2021. This gives them valid reasons to stay put with their purchase. Now, with forecasters calling for a recession, let's get to CoStar Group's chief U.S. economist, Christine Cooper, for more on this housing deadlock. And Christine, great to see you here. Let's just go over some of the economic data that came out this morning. Housing starts a little bit better than feared, I would say, and then building permits just kind of falling off a cliff again.
Yeah, that's right. There doesn't seem to be very much appetite right now for building new homes. The market has essentially been frozen for quite some time. We have inventories at very low levels. Builder starts have been slowing, as you noted, and completions have been also very slow. We only have had 8.5% increase, are down 8.5% year over year in completions of homes as builders have struggled during the pandemic with supply chain challenges and labor shortages to complete homes. And that's just resulting in sales slowing as well. We've seen this market cool. 35% lower number of sales over year in existing homes and 15% lower in new homes. So this is a market that still has a way to heal, and we'll be struggling for a little while longer.
Christine, what are the major indications that you would look to really establish that the housing market is rebalancing?
So, well, I mean, we have to see a more, like you say, a balanced market. Right now, the sellers and buyers are not agreeing on prices. Sellers still are expecting to see their home sales at a higher price than buyers are willing to pay. Buyers have been locked out of buying homes with higher mortgage rates and higher prices. Home prices have doubled since 2014. They're over 40% higher than they were before the pandemic. So that's really impacted affordability, and buyers are being priced out, and they just can't make those purchases. Now we are seeing mortgage rates have declined more recently. They've backed off of their peak that they reached, 7.1%, now back down to 6.3 or so, depending on the indicator that you're using. So once we see the affordability improve, then we'll see more buyers be able to purchase homes. And the same thing as we see mortgages rates decline, those locked in existing homeowners will be more likely to refinance or be more willing to move. And the spring season is coming up. We hope to see some improvement in the market coming up.
Improving supply chains are one critical measure for home builders, but then additionally, you think about the necessary materials going into those houses also coming down in price as well in order to make up that home. I mean, when you think about that calculus, what does that signal to you in terms of when some prospective home buyers can perhaps anticipate that there will be a more favorable market?
Well, so this is in the new homes market, right? So builders have been, over the pandemic, they've been faced by these challenges. Materials supplies were constrained. The prices were increasing quite quickly. Those prices are coming back down, and the supply chains are easing. A lot of the supply chain constraints are improving. So that will help builder margins, and it will allow them to be able to deliver homes a little bit more easily than they have been during the pandemic, and that will hopefully it'll bring cost of construction down. And like I say, builders will be more able to complete homes and provide a little bit more on the inventory side of it.
CoStar Group's chief U.S. economist, Christine Cooper, thanks so much for taking the time with us this morning.
Thank you.